All high earners should be aware of the annual allowance, as it's one of the main causes of unexpected tax bills arriving at the end of the tax year. The annual allowance is essentially the maximum gross amount of total pension savings you can make each year with the benefit of tax relief. For most people, the allowance is currently £40,000. If you earn less than £40,000, you'll be able to make personal pension contributions that are equal to your total relevant UK earnings. So if your UK earnings are £20,000 in a tax year, the most you'll be able to put into your pension that year will be £20,000. If you go over this limit, it can result in a tax charge. It isn't a penalty per se, but it can catch people by surprise, which makes it fairly challenging to manage. If you overpay into your pension, the pension provider will still automatically give you basic rate tax relief at source. And if your employer makes contributions via salary sacrifice, you will receive full basic and higher rate tax relief, as well as relief on national insurance. HMRC will look to claw back some of this tax relief at the end of the year if overpayments are made. But your funds will have to remain in your pension and will be inaccessible should you need them to settle the tax bill, so do keep an eye on it. If you're a high earner, you can also be impacted by something called the tapered annual allowance. This is when the annual allowance reduces if you earn over £240,000 a year. This isn't just applied to earned income, as it includes income from all sources, including employer pension contributions. If the income from your employer lies between £200,000 and £240,000, do still be cautious, as additional sources of income could still take you over the threshold. So when tapering is applied, it reduces the annual allowance by £1 for every £2 of income above the £240,000 mark, down to a minimum allowance of £4,000. So for example, if your earnings and employer pension contributions total £260,000, you will be £20,000 over the threshold and your allowance will reduce by £10,000. So the most you can put in your pension in that tax year will be £30,000. If you earn as much as £312,000, you'll be subject to full tapering right down to £4,000 and may need to consider alternative methods for building your retirement funds. It might even be worth having a chat to your employer and asking if you can receive additional income instead of pension contributions. There are also some other interesting vehicles you can use to receive income tax relief if you're fully tapered on your pension, such as VCTs or EISs, but they can be high risk and they're only appropriate in very specific circumstances, so it's best to take advice if it's something you're considering. As you're probably gathering, it can become a fairly complex topic for high earners, so ultimately, if you're affected by the annual allowance, you should really be working with a financial planner, just to make sure that you don't receive any unwanted tax bills or cause yourself a fairly significant financial headache. Because remember, your money really does matter.